Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you tonight. So get yourself a drink, sit back, and relax because we have a lot to talk about. Now, what I have here is the SPY, which is the S&P 500 ETF. And by looking at this ETF, you get a good idea of the overall market direction, the overall health, you could say, relative to its weekly closes. And what we have here, and what I like to identify every single weekly close, is the price action and the formation of the weekly candle. Now, what we can see here, if we zoom in a little closer, we can see that the weekly structure candle for this week's close almost formed a doji, which is a form of indecision within the market. However, we are relatively higher to considering its prior weekly candles. We are relatively higher in terms of placement of price action acceptance. However, what we have respected within this weekly candle is this candle back here. Now, what we see here is that on this candle back in August of 2022, we've rejected at the 430 level, and we got that same price action rejection on this weekly candle's close. So we can see that price definitely wanted to move up with the momentum that was generated the prior month. This week's candle wanted to move up, however, it's respecting levels. And I can totally understand how this is forming, considering that we have a lot to digest. The upcoming week, we have important dates that are coming up. One of the big ones is going to be the Fed interest rate decision, which takes place on June 14 of 2023. On top of that, I know that this is going to be a big date. A lot of people are speculating that the Fed is going to take a pause. There's no longer going to be an interest rate hike, which is generally good for the market. However, ultimately, we do not know how the market's going to react to the decision and the comments that come after. So the market can move up, but ultimately it can close down for the week. So you gotta be prepared. However, the price moves in terms of acceptance of this particular news. Now, on top of that, on top of the June 14 news event with the Fed, we have another big event, which is quadruple witching. And this is going to take place at the very end of the week, June 16. So this is going to be a big event. You're going to see a lot of price action upcoming to this particular date because you're going to get a lot of expirations between different instruments, futures options, regular stock options, because you're getting weekly closes and quarterly closes on within the option market. So there's going to be a lot of price action that's going to take place. It's to be expected. That is something that you should not avoid, but it's something that you should definitely pay attention to. And the key to all of this to avoid risk, because my whole thing is to be a risk manager when it comes to trading options, you got to understand your different levels because option prices are derived from the instrument that you are trading. And if you don't know where your levels are, that's going to be a very big disaster if you're on the wrong side of the trade. Now, with options, you can definitely eliminate risk, but the key is to understand levels within the market and to really understand how you are deciding to trade. If you really want to make sure that you get on the good side of the trade, the best thing to do is to find opportunities within the market where you can consider it to be a low risk trade. And the way to do that is to figure out levels. So if we literally look on the weekly chart, and the reason why I love the weekly chart is because you get to see big level formations where a lot of traders are respecting different levels. So obviously we've identified this level here, the 430 level. If you look back a little further, you can see that there's different touch points here where the market has rejected. And you could consider this price range here to be a very respectable level if the market were to pull back. Now, if the market were to shoot higher, you are definitely going to run into different stopping points where sellers may come in, and this is the 440 level. And considering that next week's events are going to be huge, the market may want to move all the way up to the 440 level, where you could see different rejection points here. And it's really just understanding your risk, understanding your price levels, and really making sure that you have your risk parameters put in place. Now, one thing that I like to look at here is definitely the momentum that has built in up to